How's it going, everyone? Welcome back to another episode of the Investment Hound podcast. On today's podcast, we're going to be adding more shares into our portfolio. So if you haven't seen the previous, how many episodes have we done now doing this? If you haven't seen the last 2 episodes, myself and Grandad are going to build our own investment portfolio using all the information that we've talked about in the previous podcasts and also the information in Grandad's book. So Grandad, what I'm going to do before we talk about the 2 new shares that we're adding to the portfolios this week is just kind of briefly go over the previous 6 shares that we have, just as a quick recap. I'm not going to go into any of the financials or anything, but just what the companies are. So the first one we've selected was Whitehaven Coal Limited, who are a coal mining company in Australia who engage in the exploration, development and production of coal. The next one we have is CVS Health Corporation, who do healthcare and retail pharmacy in America. The third one that we picked was Volkswagen, who of course are an automotive German multinational manufacturer producing a wide range of vehicles, including cars, trucks and buses and so on. The fourth one that we looked at was Adecco, who are a human resources and staffing company, so like HR consulting and stuff like that. The fifth one, Banco Santander, who are banking and also financial services. And the sixth one was Total Energies, who are involved in the exploration, production, refining and marketing of oil and natural gases, as well as renewable energy. So, I had sent over Grandad 2 shares the other day that I want to add in. And the first share that we want to add in is a company called Sunoco LP. So Sunoco LP is an American company primarily involved in the wholesale distribution of motor fuels. It distributes fuel to over 10,000 gas stations across the US, including Sunoco branded locations. Sunoco also operates fuel, thermal, and provides logistics services. Its businesses focus on selling gasoline, diesel, and other petroleum products to retailers, commercial customers, and independent operators. And the company also has a historic association with motorsports, particularly NASCAR, where it's served as the official fuel supplier. So now let's get into the reasons why I wanted to add these ones in. So let's have a look at the financials first. So they're listed on the New York Stock Exchange. They have a market cap of $8.3 billion US. So, Grandad, what would that be considered a micro cap in America?
Certainly small cap.
Yeah. The price is $54.59. The dividend yield is 6.5%. The payout ratio, I got a couple different figures for this, okay? So the average payout ratio I got was around 50%. The PE ratio is 7. Their beta is 1.3. The analysts that I was looking at all rated it a buy to a strong buy. The sector type, I believe, is cyclical. Would I be right in saying that, Grandad?
Well, you're going to need gas for your car, whether it's, no matter what. There's an element of cyclicality, but whether it's dominated by as it's cyclical, I'm not sure. I suppose you have to say it is because, petrol companies or oil companies are cyclical. So I suppose so, but it's kind of semi-cyclical is the way I describe it.
Okay. And you just hold that mic up, Grandad?
Sorry.
That's all right.
Forgot about that.
Yeah. And then also the revenue last year fell from 10% or minus 10% to minus 17%. So they're actually the revenue was falling, right, Grandad? But my overall thought with this one is that it has the foundations in order to become a good share to invest in because of its good dividend yield, its good payout ratio, its good PE ratio, and also what the analysts are saying. And the dividend is expected to increase in the coming year. So I would be interested to know, what is your thought on Sunoco LP, Grandad?
I like it in the short term.
Okay.
It's a very attractive, I think it's a bargain. However, mean, how long will people be pumping gas, petrol, and oil into cars is the issue.
Mm.
So I think it would be a nice one to have, but you'd have to have it on your watch list. I'm not worried about the falling revenues because the actual energy prices were falling in the last year. And I think, certainly when you look at what the analysts are saying and what people feel about it, they feel that it's got a good future. Though I believe that future is limited. So
Okay.
4 or 5 years, maybe sell it.
So it's one you'd buy now?
Yes, I would.
Interesting. What do you think about the falling revenue?
I said to you, I think it's probably caused by the fact that energy prices are falling.
Oh, okay. All right. But if you were to look at a share and you saw that it had negative revenue, would that deter you, or what would you think of that?
No,
You'd
well,
look for the
see,
source?
there's no doubt but that, 2 years ago, energy prices were extraordinarily high.
Mm.
And they're normalizing now, is what I would describe it as. And normally, I don't invest in a share that has falling energy and revenue. But on the other hand, I think this is an exception because everybody knows that energy prices were very high last year and they're not so high this year, and they're expected to be lower again next year.
Mm. Grandad, one thing that I noticed about this company when I was doing the analysis, right, is that they only supply within the United States.
Hmm.
What's your opinion on that? They've no international exports.
Yeah. Well, I mean, it's a big enough market. Remember, the market cap, it's not a big company.
Mm.
So it's plenty big enough for a company that has a market cap of just 6 or 8 billion. I mean, there's what is there, 350 million people there to it's quite a good company, I think.
Okay.
Um,
Because that was
but
something
it
that.
doesn't have a long term future. That's the only issue.
Oh, right. Okay. Because that was something that was actually kind of surprising to me, is that it only does business within America. Okay, so you would
Because it's small. I
yeah,
think it's small. I mean, it's relatively small in Irish terms, even.
yeah, that's true.
I mean, the banks here are over 10 billion,
Yeah,
and this is a company that has a market cap of 6 or 7 billion or something like that. It's
8 billion.
small,
Yeah,
and small can be beautiful.
yeah, yeah. That's good. Okay, so happy days. I picked a good one there, according to for
And the
Grandad's
other thing I
analysis.
noticed about it, right, is it's
Yeah.
always selling things, selling pieces of their business and buying pieces of their business. So they're very, if you like, diligent and, working hard on the businesses, trying to make sure that they can extend their life, I suspect.
Okay, interesting.
So I think the management is probably quite good.
Okay, so the next company that I want to add to the portfolio, Grandad, is Ryanair. And let me tell you the reason why, okay? And the reason why this came to mind when I was deciding on these companies. So normally what I do for the people at home, and I've mentioned this in a previous podcast, but normally the way I find the companies is I use a thing called a screener, where I can go in and on TradingView, which the link is in the description, okay? If you want to go in and use TradingView screener, it's free. You just have to create a free account. You can go in and you can filter out by all your different indicators that you want the company to find, okay? But Ryanair didn't fit into the indicator. So that's how I found the company like Sunoco LP, and what other ones, Volkswagen CVS and Whitehaven Co. Limited, quite, not very popular companies in the eyes of everyday people. But Ryanair is, okay? But they didn't fit in with my indicators. And the reason why I wanted to look at them and was because, granted, you do remember that during the week last week I went out and I was recording people in public, harassing them, trying to get them to tell me about their investments.
Yep.
One of the guys who we invested, who is a chartered accountant, okay, when we asked him, if I gave you €10,000 right now, what would you invest it in? He said Ryanair. And I thought that was quite interesting. And the reason why he said Ryanair and one of the reasons why he said Ryanair is because they have a great management. And I would agree with that. I do think they have good management, okay? So I went out and I had a look at them. And let's have a look at their financials here, okay? So their primary listing is on the Euronext Dublin, which was formerly known as the Irish Stock Exchange. Now, they also have a listing on the London Stock Exchange and then an ADR listing on NASDAQ. So an ADR stands for an American Depository Receipt, which is a financial instrument that represents shares in in a foreign company but trades on a US stock exchange. So it allows American investors to buy buy non-US companies without dealing with the complexities of foreign stock markets. So it also lists on NASDAQ in case anyone
And
sees that
foreign
and gets
tax.
confused.
And foreign tax. In other words, it's easier for Americans if they invest in American companies from a tax perspective, rather than having to figure out what's happening in the UK or Ireland or France or Germany, and then trying to figure out what impact that has on their American taxes. So by doing it in America, simplifies all that for them.
I'd imagine as well, for Ryanair, that also opens up a lot more opportunity to receive investment.
Oh yeah, an awful lot of European companies have ADR listings in the United States.
There was one as well, another really big one that I think it's an Irish company, maybe CRH, the cement one.
Yes,
they have a listing.
But it moved its primary listing.
Oh, okay.
From London, having moved it from Dublin to London. Now they've moved it from London to the US. And the reason why they could do that and Ryanair couldn't is because most of their turnover, most of their business is now being done in the US. Oh. Whereas in Ryanair, there's no business being done in the US. It's all being done in Europe. So your ADR system is better if, in fact, you're investing in companies which are largely dealing in overseas markets, whereas the New York listing is much better if you can actually invest in companies which have a significant proportion of U.S. activities. Because don't forget that the New York stock market, it's got a PE ratio of double virtually the Irish or British stock markets. So that if you move, as CRH did, from London to Dublin, it gets that immediate bump up because the Americans see CRH as an American company, and they see it as, if you like, participating in the American dream of eternal riches. So, in fact, it's a great way to boost your share price.
Okay. And also, I remember you telling me a story that Michael O'Leary is proud to have his primary listing in the Irish Stock Exchange as well, isn't he?
He is, yeah. He's the nearest thing to a patriot that you could call a businessman. I remember one year he had to pay 500 million in taxes, and he got a big print made of a check, drawn at probably something like the Bank of Ireland, right? Signed by him for 500 million payable to the Irish government. And he went out and he got photographs taken all over the place. He said, I'm not avoiding my taxes in Ireland. Yeah. I'm paying my taxes in Ireland. Now, what about all these other guys that consider themselves to be billionaires who actually are resident in Monaco or resident in Spain or Portugal or somewhere like that to make sure they don't pay the Irish taxes? I pay my Irish taxes, and I'm proud of it. And I'm proud that my company, and incidentally, his company, which is Ryanair, is the largest airline in Europe, which is extraordinary. Now, it only does short route journeys. It doesn't go from Dublin to New York. It goes from Dublin to Prague or Dublin to Paris or Dublin to Madrid. It does short journeys, but it has been hugely successful. And interestingly enough, Adam, you won't believe this, but one of my golfing buddies came to me yesterday, sent me an email, and he said, I'm thinking of buying Ryanair. What do you think? So I asked him why he was going to buy a Ryanair. He said, the share price has fallen by 25%. I don't believe it. And when you look at the track record of Ryanair, you wonder whether or not, the drop in Ryanair has been overdone. Now, Michael O'Leary, this is the famous patriot, okay, is famous for coming out and cooling down the markets. So he came out and he said, airline ticket prices are going to fall in the second half of this year. And that, of course, immediately people went down and said, let's get the hell out of Ryanair. Okay. Now, it now transpires that the airline tickets haven't fallen quite as much as Michael O'Leary is expecting. But the damage was done. A lot of people sold. So they're down by 25% or something in the last 6 months or something, right? So the view is that a lot of people are running out of it. But of course, that's the time to run into a company that you admire, that you believe has gone from a small. Don't forget, like Dublin has a population of 1.5 million. How come they built an airline that's the biggest airline in Europe? Okay, it obviously is an extraordinary achievement. Now they were helped. He went over to Herb Kelleher in Southwest Airlines in America, which is also a very successful short-term airline. And he picked up all the practices they had there, and he implemented them in Ryanair and some more. He got a feel for it, and it's no doubt that it's a fantastic company. Now, the only thing is he's now turned about 61 or 62 years of age. Now, how long he's going to go, I don't know, because I can tell you, he did say when he was in his early 40s, I'll be out of this place by the time I get to 50. But now he's over 60 and he's still there, right? And for as long as he's there, if there's money to be made in the airline business in Europe, he's going to do it. On the other hand, I would rate Sunoco.
Wait, hold on. Let's just have a go through their financials, okay?
Oh, all right.
Just quickly. So their market cap is 17.5 billion euro. Their price is at the minute €15.30. Their dividend yield is approximately about 1.6 is what I got, Grandad. Did you get something similar for that?
No, today off the financial at 2.3, yeah.
Yeah. Their dividend payout ratio is about 25%. The PE ratio is about between 9 to 11.
My dividend payout ratio was 12.5%.
Where were you looking, Grandad? Were you looking on the Financial Times?
I went into Yahoo Finance.
Yes,
to get that.
There was different figures on all of them that I looked at, okay? But I think that's mainly because some were showing the primary listing, some were showing like an ADR or whatever it is, or like where it's listed on the London one.
I think also, when you go in and you see 7 different articles about Ryanair, you have to bear in mind some of them could be done last February, some could be done last May, some could be done in August, and some could be done in September. But I suppose all I'm saying to you is it's irrelevant whether it's 2.3 or 1.9. Do you know what I mean?
Yeah.
It's not a dividend yield that attracts Grandad.
Yeah. So their beta is also 1.3 as well, and all the analysts that I saw were rating it either a hold or a strong buy, and there was no buys, and there was nothing worse than a hold, but they were hold or a strong buy, which I thought was interesting. Okay.
Yeah.
Now there was something that I saw here on the Financial Times, Grandad, that said revenue year on year. Ryanair Holdings grew revenues from 24.7 to 45.9, which is good.
That's post-COVID.
Yeah. And their debt has decreased as well over the past few years.
It's a very well-run company.
Yeah.
Now, as I said to you, the reason I rated Sunoco ahead of it was, number one, because of the attractive dividend yield. Okay? And number two, there was one thing that slightly bothered me, Adam. The share price is around 15 at the moment.
Yeah.
And I had a look to see what was the lowest. If you go into some websites, they'll tell you what the analysts are expecting as the low price.
Yeah.
If there's 8 guys, say, predicting a price, one of them will predict a low price. Okay.
Yeah.
The low price was 12.5. Now that's a 20% drop. Now, I had to look because I keep a track on all the shares you currently have on your portfolio, okay? And it was the second worst. So I kind of said to myself, maybe wait until the share moves up a little bit before you buy it. Now, what I said to my friend yesterday was I thought that if he bought it now, he'd have to wait a year or two to get the really good, juicy returns on it. But a year or two is not a long time to wait.
Yeah.
But he wasn't going to get it in a month or two. Do you know what I'm saying to you?
Well, Grandad, what I was thinking for Ryanair, right, okay, is that when you look at the portfolio that we've built at the minute, it seems relatively safe in terms of they all have nice cushy dividends and they're all, established companies that are doing their thing. And I was looking at Ryanair and I was like, Ryanair started in 1996, which means it's nearly been around for, 30 years?
Yeah, well,
I don't think it's going to go away within the next 5 to 10 years.
It's not, and it's well-run company.
Yeah, and I think
what I mean by that is, right, it'll have enough capital.
Yeah. And also they say the dividend is going to increase, and they've only started doing a dividend in the past couple of years, so they're only new to it. So the dividend.
That's right.
They say the dividend is going to increase, so I'm like, this is going to
10% by 10%.
And as you said, there's
but 10% of 2.3 only gets you up to 2.6.
But it's the right direction, isn't it?
Whereas Sunoco is up at 6.5. Yeah. And for me, who is a dividend junkie, Sunoco I rated ahead of Ryanair for those two reasons. That the low price was a bit scary, and the dividend yield was nowhere near where I'd be comfortable.
Yeah.
But it's a very good company. And if I was your age and I had 20 years to wait, I think you'd do much better in Ryanair than you would in Sunoco.
Yeah,
no, Sunoco does not have a long-term future. Ryanair does. But Sunoco has a short-term future. And when you're my age, Grandad, short-term is king.
But one thing I also quite liked about it as well is that it also diversifies our portfolio and spreads our risk.
Yes,
that's the only one that we have that's Irish, first of all, and the only one we have that's an airline.
Yeah.
So I thought that would be a nice.
No, it was a good idea. It was a good idea. And the Sunoco one, of course, is over in the States. You don't have a lot of US companies.
Yeah.
But it's also in the fossil fuel business, which seems to be attracting you very strongly.
Yeah. Well, it was either that or Chinese companies, Grandad. So So yeah. Okay. So we'll add those in. Were you going to say something about the other ones there?
Well, what I did do is I had a look to see how I would rate today the companies that you have. And you now have, is it 6? Yeah,
8.
8 companies now, right? And I rated Sunoco joint second with Banco Santander. And I rated Ryanair, I think up around 4 or 5 or 6. It was high-ish because of those two factors that I mentioned to you.
Can I guess what the worst one is?
You can. I'll have to look at it now.
Yeah, pull it up there. Yeah, because I know what the worst one is.
You do you?
Volkswagen. It has to be. I think when we said it, I was trying to find the numbers earlier. Okay, so I think when I talked about Volkswagen, I was like, "This is going to be a great one." And we talked about it, Grandad, when it was at, I think, about €124 a share, wasn't it?
Yeah.
What's it at now?
At 90 something, yeah.
Yeah, I checked it there the other day.
And don't forget,
95.
Grandad bought it at €123.
There you go.
But number one, from what I'm looking at here, is Total Energies of your shares, right?
Okay, that's good.
Number 2 is Sunoco.
Okay.
And has the same rating as Banco Santander.
Okay.
Number 4 is Adecco, which we discussed at length last. Number 5 is Whitehaven Coal, right? Okay, light that fire.
Yeah.
Number 6 is Volkswagen.
Yeah.
Number 7 is Ryanair. And number 8 is CVS Health.
Wow, okay.
But that'll change, that'll change all the time. You know what I mean?
Well, I
And what
suppose.
we'll do is we'll continue to build a portfolio,
Mm,
and then we look and see what you do now. Now that you have
yeah,
your portfolio built,
yeah,
where do we go from here? You know?
yeah. Because it's also important to note, okay, before people start thinking I'm fucking useless at this, but I think it's also important to note that there has to be blood in the streets as well. And we only picked these within the past month or so as well, you know. So
Yeah, yeah.
yeah,
And it will be fascinating when you finish it to see whether or not you're happy with what you've got. Do you know what I mean?
yeah, yeah. Okay,
You know,
lovely stuff. Well, that was a good one. That was interesting. I'd say I'm looking forward to next week's one. So I think we're going to do two more that we said, wasn't it? We're going to do two more, and then we're going to
it's my turn to pick two for you, isn't it?
yeah, and then we're going to reanalyze the portfolio.
Yeah.
Okay,
All right. So
very good. Anything you want to say at the end, Grandad?
no, just I'm enjoying it. And of course, I'm looking very sick with my Volkswagen purchase.
Yeah,
You know, but that's life, you know.
that's it. Yeah. So maybe actually now that that's gone, you know what I've also been thinking, Grandad, the past few days, right? Now that that's down in 95 or 96,
You
now is
better
probably
buy
a good
more.
time for me to get into it. You know.
No, I think
But yeah.
Volkswagen. You know what's happened there, do you? That in fact they want to close a big factory that they have, a big motor manufacturing plant that they have in Germany. Now it's a
Oh.
German company, one of the biggest companies in Germany, and they want to close one of the biggest factories they have. So they've entered into discussions with the trade unions. And of course, in Germany, the trade unions, they can't, some of them sit on the boards of the company, and that kind of stuff. It's very hard to get things through the trade unions. Uh, I have confidence, okay, that they will succeed, but they'll go through a rocky ride.
Okay.
The other problem I just worth bearing in mind about Volkswagen is that its single biggest export market, is China, and China is having its problems.
Mm.
So it's a big problem with China. That's why they don't need to build as many cars if they can't sell as many cars. And so that's what they want to do there. And obviously, Germany is probably a more expensive place to manufacture than it might be in other parts of the world, right? So, you can see that the management are on the case,
Mm.
but it's going to be a tough battle.
Yeah.
You
Do you
know,
know, Grandad, when I was picking these shares, okay, the amount of Chinese companies that fit my criteria that I have to avoid, the amount of banks and industrial production companies and all these different types of companies, okay, that would work, where they have a high dividend yield, the low payout ratio, low beta, whatever all the indicators that I'm choosing are. But I just don't want to go near anything Chinese at the minute unless it's a takeaway because of the threats with Taiwan or whatever.
yeah. Well, everyone has a risk appetite. Remember, I said that to you.
Yeah.
And your risk appetite is no to China.
Mm.
And yes, that can change, but that's
Yeah.
where you are today, and you have to trust your instincts. I
Mm.
mean, I wouldn't invest in China because I don't like an autocratic kind of a country. I think I told you about the time that IBM
Yeah.
got a great deal in Shanghai, and the next thing was the Chinese government said, no, we don't want overseas companies doing this kind of business in China anymore. Bye bye.
Mm.
So
Yeah.
that frightened me. So I don't know. I mean, and the other thing is, I think I said to you that my brother said to me, Bill said to me, if you invest in Caterpillar, Caterpillar is a big company exporting a huge amount to China. So you can get exposure to China by investing in overseas companies
Mm.
rather than investing in Chinese companies. So
Yeah.
that's as close as I'd go. But of course, Volkswagen is one of those overseas companies that's paying a price now.
Yeah.
You know.
Well, one of the I'm just trying to find it really quickly here, okay? One of the companies that we mentioned before, yeah, Whitehaven Coal Limited, the Australian coal mining company,
Yes.
one of their biggest countries that they export to is Taiwan.
Yeah.
So that might be something that we'll take into consideration when reanalyzing because obviously we all know the threat that's happening with China and Taiwan.
Yeah,
So
as against that, if China invades Taiwan, do you think the Americans would go in and fight China on behalf
I,
of
I,
Taiwan?
do
Or
you know
will they
what?
just say,
I have no
or will they
idea.
just say, throw a few more sanctions on China?
I don't know. I actually don't know, Grandad. I have no idea
If
because
I was
of
Taiwan, I wouldn't be relying on. I certainly, as an Irishman, we've always been secure that the Americans would look after us. I'm not so sure that's still so.
I don't think so either. Yeah,
You
I
know,
see because also, well, first of all, that would never happen with us. But I also think that with the whole situation now about Ukraine and Russia, are America going to fund Ukraine if Ukraine attack Russia? Well, then who says that they're going to help China if in China or Taiwan? I mean, if Taiwan attack China,
yeah,
or
I
are they
agree
only
with
going
you.
to fund them to defend themselves? Who knows? A lot of uncertainty around that at the minute. So I don't know. I'm just going to avoid it anyways. Close my
Yeah.
eyes and hope for the best.
Well, you see, if you had 10 million to invest,
Mm,
you could parcel a million out and throw it into China. But if you have 10,000 to invest, okay,
mm,
you wouldn't want to lose your 1,000 in China.
yeah,
So it's a question of how much money you have and how much, and that's another factor about how much risk you're willing to take.
yeah,
And you're starting out in life, you can't have a lot of money. So
yeah.
but
Well,
that
also I
could
think that
change.
it would also depend on how already diversified your portfolio is. If you have a very diversified portfolio, then I think you can afford to take that risk in China. But if you
Mm,
don't, and let's say you're like us at the minute where we only have 6 or 8 shares, then maybe it's not going to be a good idea.
yeah, yeah.
Yeah.